Based on the historical data and forecast, Bitcoin has shown considerable volatility. The RSI has fluctuated between 40 and 69, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been widening and contracting, suggesting periods of increased and decreased volatility. The forecast data indicates a downward trend, with prices expected to fall from 113,400 to 109,200 over the next week. Given this information, I recommend a short-term short position strategy. We will enter a short position at $113,400 with a stop loss placed at $114,000, just above the resistance level. The initial target price will be $110,300, aligning with the forecast data. If the price reaches $110,300, we will move the stop loss to the entry price of $113,400 to secure profits and reduce risk. The final target price will be $109,200. This strategy combines trend analysis, support and resistance levels, and forecast data to maximize potential returns while mitigating risk. Based on the historical data and forecast, Ethereum shows a volatile trend with periods of consolidation and upward movement. The RSI indicates periods of overbought and oversold conditions, while the Bollinger Bands suggest potential breakout opportunities. Considering the support price of $4,090 and resistance of $4,470, I recommend a combined strategy utilizing RSI and Bollinger Bands. Initially, we will enter a long position at $4,330, capitalizing on the upward trend suggested by the forecast prices and recent price action. A stop loss will be set at $4,090, just below the support level, to mitigate potential losses. The initial target price will be $4,380, aligning with the forecast for August 22, 2025. Subsequently, if the price breaks above $4,380, we'll adjust the target price to $4,470, the resistance level, aiming for a more substantial profit. If the RSI reaches an oversold level below 20, which hasn't occurred recently but remains a possibility, we'll consider a long entry at the bottom of the Bollinger Bands, around $3,170, with a stop loss at $3,360 and a target price of $4,090. This portfolio combines the momentum of the upward trend with the volatility indicated by the Bollinger Bands and the risk management of the RSI, offering a high return potential with defined risk parameters. Based on the historical data and forecast, XRP shows a downtrend with recent price fluctuations. The RSI consistently dips below 60, indicating a lack of strong bullish momentum. The forecast for the next week predicts a continued downward trajectory, with prices ranging from $3.0 to $2.83. The support price remains stable at $2.74, while the resistance is at $3.08. Considering these factors, I recommend a short position strategy. The entry price should be $2.92, coinciding with the forecast price on August 22, 2025. A stop loss should be set at $3, just above the forecast high, to limit potential losses if the price unexpectedly reverses. The target price is $2.83, aligning with the forecast low for the week. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently near the lower band, suggesting potential for further decline. The RSI is currently in the mid-range, but trending downward. Therefore, a combined strategy will be implemented. Entry price $2.92, stop loss $3, and target price $2.83. This strategy leverages the forecast, support and resistance levels, and technical indicators to maximize potential returns while managing risk. This portfolio provides a high probability opportunity for profit given the current market conditions. Based on the historical data and forecast, BNB shows an overall upward trend with periods of consolidation. The RSI consistently fluctuates around the 60 to 70 range, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands indicate increasing volatility, with the price frequently touching the upper band. Considering the forecast for the next 2 weeks, predicting a range between $854 and $872, I recommend a long position strategy. Entry price should be $854, with a stop loss set at $841, just below the recent low. The initial target price is $872, aiming to capture the predicted upward movement within the forecast period. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 50, indicating a potential oversold condition, we can enter a long position at $854, with a stop loss at $841 and a target price of $870. Conversely, if the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the price reaches $830, we can enter a long position with a stop loss at $827 and a target price of $854. Combining these signals, a portfolio with a weighted average of 60% for the forecast-based strategy and 40% for the RSI/Bollinger Band strategy should maximize returns while managing risk. Based on the historical data and forecast, Solana demonstrates volatility with an overall upward trend, bouncing between support at $163 and resistance at $190. The RSI fluctuates, but generally remains within a range, suggesting neither extreme overbought nor oversold conditions currently. The Bollinger Bands indicate periods of contraction and expansion, reflecting changing volatility. Given the forecast prices hovering around $183 to $185, I propose a moderately bullish strategy. We will initiate a long position at $182, coinciding with a slight dip and a potential bounce. A stop loss will be placed at $177, just below the lower Bollinger Band to mitigate potential losses if the price declines further. The target price will be set at $190, aligning with the established resistance level, offering a reasonable profit margin. To refine this strategy, we will incorporate RSI signals. If the price drops and the RSI falls below 20, indicating an oversold condition, we will enter a long position at that lower price. Conversely, if the price rises and the RSI reaches 80 or above, signaling an overbought condition, we will consider taking profits or initiating a short position. The portfolio will prioritize the Bollinger Band strategy for its responsiveness to volatility and the RSI strategy for identifying potential reversals. The final strategy will be a combination of the two, with the Bollinger Band strategy as the primary driver and the RSI as a confirmation signal. If the price is at $182 and the RSI is below 20, we will enter a long position at $182 with a stop loss at $177 and a target price at $190. Based on the historical data and forecast, TRON shows a slight upward trend with recent price fluctuations. The RSI consistently stays above 60, indicating bullish momentum, but approaching the overbought territory of 80 suggests potential short-term corrections. The Bollinger Bands have been expanding, indicating increased volatility. The forecast prices predict a continuation of the upward trend, hovering around $0.35 to $0.36. Considering these factors, I propose a strategy focused on capitalizing on short-term pullbacks while maintaining an overall bullish outlook. My recommended strategy is a combination of RSI and Bollinger Bands. We will enter a long position when the price touches the support price of $0.348, as this aligns with a potential oversold condition and a bounce-back opportunity. The stop loss will be set at $0.345 to limit potential losses if the price continues to fall. The initial target price will be $0.363, coinciding with the forecast price and the upper Bollinger Band. If the price reaches this target, we will move the stop loss to the entry price of $0.348 to secure profits and protect against a reversal. Further gains can be targeted at $0.37, but this will require reassessment of the technical indicators and market conditions. This strategy aims to capture short-term gains within the overall bullish trend while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a downtrend with fluctuating volatility. The RSI consistently hovers around the 50 level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility. The support price is consistently at $0.192, and the resistance is at $0.223. Considering the forecast data, the price is expected to continue its downward trend, potentially reaching $0.212. Therefore, I recommend a short position. Entry price should be $0.235, with a stop loss set at $0.223, just above the resistance level. The target price should be $0.212, aligning with the forecast. To maximize returns, I propose a portfolio strategy combining RSI, Bollinger Bands, and support/resistance levels. Initially, enter a short position at $0.235. If the price breaks above the resistance at $0.223, immediately close the position and implement a long position at $0.223 with a stop loss at $0.212 and a target price of $0.235. If the price falls below the support level of $0.192, close the short position and remain neutral, anticipating a potential rebound. This dynamic strategy allows for adapting to changing market conditions and capitalizing on both upward and downward price movements. Based on the historical data and forecast, Cardano shows a volatile trend with recent upward momentum. The RSI fluctuates between 52.3 and 72.2, indicating periods of both oversold and overbought conditions. The price has tested the resistance level of $0.963 and the support level of $0.851. Considering the forecast for the next week, which ranges from $0.866 to $0.906, a moderately bullish strategy is warranted. I recommend a long position entry at $0.866, coinciding with the lowest forecast price and a potential oversold condition based on the RSI. A stop-loss order should be placed at $0.851, just below the established support level, to limit potential losses. The initial target price should be $0.906, aligning with the highest forecast price, aiming for a quick profit. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity. Therefore, a second entry point could be considered when the price tests the bottom of the Bollinger Bands, currently around $0.666. A stop loss should be set at $0.652 for this entry. The target price for this entry would be $0.866. Combining these two strategies, the portfolio will be diversified, with the primary strategy focusing on the forecast and the secondary strategy leveraging the Bollinger Bands for additional entry points. This approach aims to capture both short-term forecast movements and potential reversals near the lower Bollinger Band, maximizing profit potential while managing risk effectively. Based on the historical data and forecast, Chainlink exhibits an overall upward trend with consistent support at $24. The RSI consistently fluctuates, occasionally dipping below 60 but rarely reaching the oversold level of 20. The Bollinger Bands indicate periods of volatility, with prices frequently touching the upper band, suggesting bullish momentum. Considering the forecast prices are consistently above $25, with a peak of $27, I propose a strategy focused on capitalizing on upward momentum. We will implement a combined strategy using RSI and Bollinger Bands. The entry price will be $25.3 on August 22, 2025, when the forecast price opens. The stop loss will be set at $24, aligning with the established support level, to mitigate potential losses. The initial target price will be $26.6, coinciding with the recent resistance level and the forecast price on August 23, 2025. If the price reaches $26.6, we will adjust the stop loss to $25.3 to protect profits and set a new target price of $27, based on the forecast price on August 26, 2025. This strategy aims to capture short-term gains within the prevailing upward trend while managing risk through strategic stop-loss adjustments. Based on the historical data and forecast, Wrapped Beacon ETH has shown volatility with a clear upward trend. The price has consistently bounced off the support level of $4,400 and tested the resistance around $4,570. The RSI indicates periods of overbought and oversold conditions, with recent values suggesting a moderately overbought market. The Bollinger Bands have widened, indicating increased volatility, and the price is currently trading near the upper band. Considering these factors, I recommend a long position strategy with a focus on capitalizing on potential upward momentum while managing risk. My strategy involves entering a long position at $4,710. Given the current market conditions, I'll set a stop-loss order at $4,660 to limit potential losses. The initial target price will be $4,780, aligning with the previous resistance level. If the price reaches $4,780, I will consider moving the stop-loss to break even to protect profits and potentially target a higher price of $4,810. This approach combines technical indicators and price action to maximize potential returns while minimizing risk. This strategy is suitable for a high-risk tolerance investor seeking significant gains. Based on the historical data and forecast, Quant shows a downtrend. The price has been fluctuating between a support of $102 and a resistance of $115. The RSI consistently stays below 50, indicating a bearish momentum. The forecast for the next week predicts a continued decline, with prices ranging between $103 and $106. The Bollinger Bands also suggest a downward movement, with the price nearing the lower band. Therefore, I recommend a short position strategy. We will enter a short position at $106, placing a stop-loss order at $104 to protect against unexpected upward movements. The initial target price is set at $102, aligning with the established support level. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 37.5, indicating an oversold condition, we will hold the position. If the price touches the bottom of the Bollinger Bands, which is $103, we will consider tightening the stop-loss to $103. If the price breaks through the $102 support, we will exit the position and consider a long position. The predicted price movement based on the forecast data and technical indicators suggests a high probability of a successful short trade. This strategy aims to capitalize on the current downtrend while mitigating potential risks through strategic stop-loss placements and adjustments based on technical indicators. Based on the historical data and forecast, PAX Gold has been trading within a narrow range between $33.10 and $33.30. The RSI indicates that the asset is currently neither overbought nor oversold, fluctuating around the mid-50s. The Bollinger Bands have been relatively stable, suggesting low volatility. Given this sideways trend, a range-bound strategy is recommended. I suggest a long position at $3,320, with a stop-loss placed just below the support level at $3,300. The initial target price should be the resistance level at $3,330. To maximize returns, we can implement a dynamic strategy adjusting the target price as the price moves. If the price reaches $3,330, we can move the stop-loss to the entry price of $3,320 and set a new target price at $3,340. If the price fails to reach $3,330 and falls to $3,300, the position will be closed, limiting losses. This approach allows us to capitalize on the sideways movement while protecting against significant downside risk. The final portfolio should include 60% of the range-bound strategy and 40% of the RSI strategy. Based on the historical data and forecast, TRON shows a slight upward trend with recent price fluctuations. The RSI consistently stays above 60, indicating bullish momentum, but approaching the overbought territory of 80 suggests potential short-term corrections. The Bollinger Bands have been expanding, indicating increased volatility. The forecast prices predict a continuation of the upward trend, hovering around $0.35 to $0.36. Considering these factors, I propose a strategy focused on capitalizing on short-term pullbacks while maintaining an overall bullish outlook. My recommended strategy is a combination of RSI and Bollinger Bands. We will enter a long position when the price touches the support price of $0.348, as this aligns with a potential oversold condition and a bounce-back opportunity. The stop-loss will be set at $0.345 to limit potential losses if the price continues to fall. The initial target price will be $0.363, coinciding with the forecast price and the upper Bollinger Band. If the price reaches this target, we will move the stop loss to the entry price of $0.348 to secure profits and protect against a reversal. Further gains can be targeted at $0.37, but this will require reassessment of the technical indicators and market conditions. This strategy aims to capture short-term gains within the overall bullish trend while managing risk effectively. Based on the historical data and forecast, Aave shows a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 50 level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. The forecast for the next week predicts a range-bound movement, hovering around $294 to $298. Considering the support at $286 and resistance at $302, I recommend a strategy that combines RSI and Bollinger Bands to capitalize on short-term fluctuations. My strategy involves a combination of RSI and Bollinger Band signals. I will enter a long position at $295 when the price touches the lower Bollinger Band and the RSI is below 50. The stop loss will be set at $288, just above the support level, to protect against a potential downward trend. The target price will be $302, aligning with the resistance level. If the price breaks above $302, I will consider adjusting the target to $305. Conversely, if the RSI reaches 80 while within the Bollinger Bands, I will consider taking profits at $294. This combined approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Jito has shown volatility with a general downward trend. The support price is consistently at $1.63, while the resistance fluctuates around $1.89. The RSI indicates periods of oversold and overbought conditions, with recent readings trending below 50, suggesting weakening momentum. Considering the forecast prices, which are slightly decreasing, and the Bollinger Bands showing potential for further price declines, a short selling strategy is recommended. We will initiate a short position at $1.74, placing a stop-loss order at $1.77 to protect against a potential upward reversal. The initial target price will be $1.63, aligning with the established support level. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will hold the position and wait for a potential bounce, adjusting the target price to $1.71. Conversely, if the price touches the lower band of the Bollinger Bands, it reinforces the downward trend, confirming our short position. If the price reaches the target of $1.63, we will secure profits. This combined approach leverages multiple indicators to maximize returns while managing risk effectively, aiming for a high-yield investment in Jito. Based on the historical data and forecast, TRON shows a slight downward trend, especially considering the forecast for the next 2 weeks. The RSI consistently fluctuates, but recently dipped below 50, suggesting a potential oversold condition. Bollinger Bands indicate that the price is approaching the lower band, which often signals a potential bounce. Therefore, I recommend a contrarian strategy focusing on short-term gains. We will implement a buy strategy when the RSI falls below 40 and the price touches the lower Bollinger Band. The entry price will be $3.25, with a stop-loss placed just below the support level at $3.20 to limit potential losses. The target price will be set at $3.35, aiming to capture a rebound towards the middle Bollinger Band. To optimize returns, I propose a portfolio that combines this strategy with a smaller position based on breakout potential. If the price breaks above the resistance level of $3.52, we will initiate a long position with an entry price of $3.55, a stop loss at $3.50, and a target price of $3.70. This breakout strategy should constitute only 20% of the total portfolio, while the contrarian strategy, buying near the lower Bollinger Band, will comprise 80%. This blended approach allows us to capitalize on both potential bounces and breakouts, maximizing overall returns while managing risk effectively. Based on the historical data and forecast, SUN token shows an overall upward trend, consistently bouncing off the support price of $0.023. The RSI is fluctuating around 65 to 80, indicating overbought conditions at times but generally maintaining positive momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. The forecast indicates a continued upward trajectory, with prices ranging from $0.024 to $0.0247. Considering these factors, I recommend a long position strategy. We will implement a three-tiered strategy combining RSI, Bollinger Bands, and support/resistance levels. First, enter a long position at $0.024, coinciding with the beginning of the forecast period and near the current price. Set a stop loss at $0.023, just below the established support level, to limit potential losses. The initial target price will be $0.0245, aligning with the forecast peak and the upper Bollinger Band. If the price continues to rise and breaks above $0.0245, move the stop loss to $0.024 and set a secondary target price at $0.0247, the highest point in the forecast. This strategy balances potential gains with risk mitigation, capitalizing on the projected upward trend while protecting against unexpected downturns. Based on the historical data and forecast, NEXO shows a slight downward trend, with the forecast prices consistently around $1.31 to $1.30. The RSI indicates that the asset is currently in the oversold territory, fluctuating between 40 and 50, suggesting a potential for a bounce. The Bollinger Bands also support this view, as the price has been testing the lower band for several days, indicating a possible reversion to the mean. Therefore, I recommend a moderately bullish strategy capitalizing on a potential short-term rebound. We will enter a long position at $1.28, placing a stop-loss order at $1.27 to limit potential losses. The initial target price will be $1.33, aiming to capture a portion of the expected rebound. To maximize returns, we'll implement a dynamic target price strategy. If the price reaches $1.33, we will move the stop loss to the entry price of $1.28 to secure profits and further reduce risk. If the price continues to rise, we will set a second target price at $1.35, taking partial profits along the way. This tiered approach allows us to benefit from any upward momentum while protecting our capital. This portfolio combines the RSI oversold signal, Bollinger Band support, and a dynamic profit-taking strategy to achieve high returns with managed risk. Based on the historical data and forecast, NEO shows a fluctuating trend with periods of both bullish and bearish momentum. The support price consistently remains around $6.16, while the resistance fluctuates but generally hovers around $6.81. The RSI indicates periods of oversold and overbought conditions, with recent values fluctuating between 42.1 and 58.7. The Bollinger Bands show that the price has been oscillating within the bands, suggesting periods of volatility and potential mean reversion. Considering these factors, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels to maximize returns. My recommended strategy involves a long position with an entry price of $6.37 on August 22, 2025. The stop loss should be set at $6.16, just below the consistent support level, to limit potential losses. The initial target price is $6.6, aligning with the forecast price and the upper Bollinger Band. If the price reaches this target, we will consider moving the stop loss to the entry price of $6.37 to secure profits and reduce risk. Further, if the price continues to rise and breaks above the $6.63 level, we can increase the target price to $6.63. This combined approach leverages the strengths of each indicator, providing a robust and adaptable strategy for high returns. Based on the historical data and forecast, Zcash demonstrates a volatile trend with periods of both upward and downward movement. The RSI readings fluctuate between 38.1 and 61.0, indicating oversold and overbought conditions. The Bollinger Bands show that the price has frequently touched the upper and lower bands, suggesting high volatility. Considering the forecast for August 22, 2025, to August 28, 2025, the price is projected to increase, with a high of $42.6. Therefore, I propose a long position strategy. Entry price should be $38.9, with a stop loss set at $34 to limit potential losses. The initial target price is $42.6, aiming to capitalize on the predicted upward trend. To enhance the strategy, I will incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it signals a potential buying opportunity. Conversely, when the RSI exceeds 70, indicating an overbought condition, and the price touches the upper Bollinger Band, it suggests considering taking profits or reducing exposure. For this strategy, I recommend entering a long position at $38.9, setting a stop loss at $34, and targeting $42.6. If the price reaches $42.6, consider adjusting the stop loss to a break-even point to protect profits and potentially ride the trend further. This combined approach leverages both trend analysis and technical indicators for optimized risk-reward management.